Hey guys, it's Tanner Manson from Future Investing, and today I want to talk to you guys about Western Digital Corporation. Now, this company has actually been on my mind for some time now, and the reason being is that they're the 9th biggest increased position in 2020 across the 70 top hedge funds in the entire world. This is massive news because this is not a company that I think is spoken about a lot across the business news sort of industry. So if you're just finding my channel now and you want to hear about Western Digital, welcome. If you're one of my subscribers, pay attention because this might be something that you guys are interested in if the tech space is sort of your area. If not, maybe you just learned something new. And if you enjoyed the content, give it a like. And as always, as a disclaimer, although I am actually a financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion, and you can choose to do what you wish with this information. All right, let's jump into it. So, what does Western Digital do? Well, they develop, manufacture, and sell these hard drives and a lot more storage spaces, micro SD cards, USBs, hard drives for consoles, for PCs, laptops, even data centers, and selling to corporations and enterprises. They even own some subsidiaries that you might have heard of, even SanDisk, which is a huge manufacturer for micro SDs, as well as some USBs. So as of recording this on the 17th of December, the stock price is at $53.39, making the market cap of this company at $15.6 billion. Now, the market cap is every single one of the shares available, added up, and that would give you the value of the company, the market cap. So $15.6 billion, as well as a price to earnings ratio of 8.5 times. Okay? And if you haven't seen my other videos, you know that that's a big thing for me. I love whenever a stock is on a discount, especially a tech stock. Now, this necessarily doesn't need to be a sale all the time. It could mean that the company is prepared to make less in the future, or there's a reason why they may not grow as quick, so people are paying a lesser amount. In a data storage company, where I think that industry is always going to grow, I don't know. We'll look further into it, but for right now, let's say it's on sale. And the price to sales ratio here is 0.94. Now, if you know, anything under 2, in my opinion, would be considered a good price to sales ratio unless it's a really particular growth stock. Anything under 1 could be considered very, very good. Okay, an excellent price to sales ratio. 0.94, we're in that range. So let's continue here. What we're not paying for in this company is their previous 2% dividend. Now, they held a dividend before paying 2%. They don't currently. So those sort of dividend growth investors that might want a company like this aren't currently invested, and that's not going to be priced into the evaluation either. Let me break down some history here for you on Western Digital. All right, if you guys know the history of this semiconductor, the oversupply due to Bitcoin back in 2018, well, Western Digital was a part of that, even though they don't necessarily have semiconductors. They were a part of the mining process, though, for sure. In 2018, Western Digital had made out like bandits, making $7.7 billion in gross profits that year. And later, into 2019, after Bitcoin had started crashing, the mining had slowed down. You had seen all sorts of companies, AMD, NVIDIA, all sort of crashing due to this scare that there was an oversupply in the market. Well, Western Digital also fell, and along with that, their sales fell, their stock fell, dropping down in profits, crashing, actually, not dropping, to $3.7 billion in gross profits. Okay, from $7.7 billion. That's more than a 50% drop in their profits, and yet the stock back in 2018 was at $96, had crashed down to $36 the previous year. Like, 1 quarter release, and boom. Same thing happened in NVIDIA, AMD, all of them got hit during that time, and they've been making slow recoveries ever since. Slow is one way of putting it. It was massive, okay? NVIDIA has blown up. AMD has blown up. Western Digital, though, has not quite blown up. And maybe some smart money here, some really smart money, sees an opportunity that we quite just don't yet. So in 2019, whenever they had brought in the $3.7 billion worth of gross profits, they had only actually, their net income was negative $750 million. Here in 2020, they have brought in only $3.9 billion, nowhere near the $7.7 billion in gross profits, but yet still a net income of negative $35 million. A massive increase from where they were from 2019, the previous year. You know, we're climbing back slowly, but it was still a stab. In terms of what they're actually taking home, this is a significant increase from what it was the previous 2 years. But this is happening because they're dealing with their expenses, lowering their costs, and getting back to normal, getting that supply back, and as demand starts to recover. Also on the bad news train, they have a beta of 1.66, which, as you may know, maybe you've seen it in my previous videos, it's a score to base off what the risk is for this company against the market as a whole. So it's about 1.66 times more vulnerable than the market. So if there is a recession for the markets, they're saying that, you know what, that probably even happened even earlier, or a situation could have been more likely that Western Digital got hit before the markets did. Maybe it's due to their cash and their debt. So for cash right now, they have about 3 times their debt at $9.6 billion. Okay, a little over 3 times. It's not a good situation. You never want to see someone in debt in the 10-figure range. It's crazy that we deal with these kind of numbers, but it's the truth. But it might not be that bad of a situation. For these growth style R&D companies that have to continuously put out the new best product, it's very common that we see some heavy debt in bad situations like this, especially with the sickness that we have today. So what's my opinion? I mean, with a world that's getting more and more digital, and with all these lockdowns and sicknesses that are going around, making that even a faster process, all this work from home and all these things, this is an industry that not only has to stay around, but it's a growing one, and it's going to be growing faster and faster. You see a need for ever increasing amount of storage, whether it's more YouTube videos, although it's not actually at home in personal hard drives, it is on YouTube's database. And that's some hard drive somewhere in the United States or somewhere around the world. And they have to be buying, enterprise level data centers. And with that, guess who they're buying them from? Now, this is what I think a lot of these hedge funds are seeing. Although we are moving to a more cloud-based system, or even like for my work, we use all Salesforce and it's just all uploaded to the cloud, they still need to buy their storage somewhere. And those hard drives are faulty. They are built to fail over and over, and so they need more maintenance, more support, more replacing these things. It's a constant revenue stream. And Western Digital knows this. Now let me read you a quote here. Western Digital's hard drive R&D, research and development, is focused almost exclusively on serving their enterprise and data storage customers. The flash memory business isn't quite so narrowly focused, but the server market is definitely where Western Digital would prefer to be selling most of their NAND. Boom. Now, it's also stated there that they have their current enterprise and data storage sales is about less than 10% of the amount of profit that they make up each year. But coming next year, they want to increase that to as much as 20%, doubling their foot in the door for their data center sales and selling to corporations and enterprises. So tell me what you think. I don't really have strong opinions on this company. I do not currently own it. And, if it heads back down to the price that it was before the pandemic of around $27, I could see myself picking it up. I probably wish I would have saw it earlier. But, you can't keep your eye on all of them. I don't have a huge team behind me or something like that. But with Western Digital's track record of being the new innovators in this space, because whenever there is something that's new in this business, it usually is Western Digital that comes out with the new tech first. They are great innovators. And so with that keen mindset and their now new focus to step into data centers and big business, I can see this company taking off. And not only do I think I see that, but you can see that smart money, big money, is seeing that as well. You know, this is not small money stepping in to place bets on Western Digital. This is tens of hundreds of billions of dollars that are stepping into these sort of businesses. Obviously not that big. I mean, the company is only worth $15 billion, but these hedge fund owners need to park their money and they're not taking speculative bets. If there's anything I've missed, you know that they've caught it. And there is a reason why they're investing so heavily in this style of a business. I think because it's priced as a value stock, and a failing one at that, when they realize that it's actually a growth company. This is a company that soon my desk is going to have hard drive space in it and semiconductors, and everything's going to become a computer soon, and it's all going to need that technology. And if you have a big player like Western Digital and you can get it at a price that's this cheap, especially at the prices back when it was $27 a share during the pandemic, I think you might have a good buy here. Anyways, guys, if you've made it this far, I appreciate it. I've been liking doing these videos, but it's just I find myself very busy these days, so I try to find some time here and there. Eventually, soon, I'm going to try to find a consistent schedule and all that stuff to sort of do some stock breakdowns and all these things. I know that my Jets video is being liked more than anything else I'm making, so I think maybe just doing these stock picks will be better. I've got another video coming out soon. I don't want to leak it just yet, but it rhymes with Schmamazon. Anyway, if you enjoyed this video, I appreciate you giving me a like. It always helps out the algorithm and lets me know that you guys like this content and to create more. If you really like it and want to see more content, subscribe. That helps me out as well. And until next time, guys, you already know, although I am actually a financial security advisor as my full-time job, none of these stocks or topics that we talk about today are in any way my recommendation. This is merely my opinion. You can choose to do what you wish with this information. All right. See ya.